Now, so what I'm going to talk about today, I'm going to give you some introduction and background to my work. I'm going to talk about the general connection between poverty and mental health. Then I'm going to introduce the issue of financial services, explain what they are and why do they matter. And then I'm going to talk about the work that we've done to understand how we can improve access to financial services that meet the particular needs of people with mental illness. Please ask questions using the chat box at any point during the webinar. I will be pausing every now and then specifically to ask if people have questions and to address those that have already been put in. So how we've learned what we've learned. So I started doing this research, as I said, about 8 years ago. We initially started with the funding from the wonderful Connecticut Mental Health Center Foundation, which recognized that although the Mental Health Center, where the foundation is based, was serving people's mental health problems, was serving people with mental illness extremely well in terms of dealing with their mental illness, they really didn't know what to do about the poverty that people were experiencing and the financial difficulties they were having. And at this particular mental health center, which serves around 5,000 people a year, people had very different types of mental health problems, but they pretty much all had one thing in common, which is that they were struggling financially. So I began to work with the foundation to think about what we could do to apply lessons from the world of poverty alleviation and financial services to populations of people with mental illness. Based on the foundational research that we did with CMHC, we received an NIMH R34 grant to test providing different types of financial supports to people with serious mental illness, including one-on-one financial counselling, a peer-facilitated support group, and a savings club. Since then, we've been focusing on different areas. We've been doing research into understanding the experiences that people have with payees. We're looking very closely at debt these days, recognizing that there's a huge debt burden on poor people generally, and specifically on people with mental health problems. So I want to thank all of the funders listed here. Now, I'm going to just start by saying what I'm not going to talk about. Typically, when I tell people that I work on money and mental health issues, the assumption is that I'm kind of running a money management program. Most of the research in this area to date has been done in 3 areas. The first is assessing individual capacity to manage money. If any of you work in mental health, you'll know that sometimes people with mental health problems have financial control removed from them and given to a representative payee or a conservator. And it's very important, clearly, that we need to assess people's capacity properly so that people don't lose control of their money unless it's absolutely necessary. So that's an important area of research that I'm not going to talk about. Not because it's not important, but just because that's not the area of my research. The second thing I'm not going to talk about is understanding what happens when somebody's money is controlled by somebody else. A fair amount of research has been done into this. I think more is needed. Again, that's not what I'm going to focus on today. And then the other area that we tend to think about when we're talking about financial problems is financial literacy training. I'm not going to specifically talk about financial literacy training, and I'll explain that in a moment. The reason that I'm not going to talk about these particular things is my work really focuses on the environment that people live in and how that affects all of these things. So basically, what more do we need to know around finances and mental health? My argument is that although individual capacity matters, doing an assessment of someone's individual capacity fails to take into account the environment that person is living in. So I'm really interested in how the environment a person lives in affects their ability to manage their money. Similarly, with control relationships, when somebody's controlling someone else's money, it's really important to understand what happens with those relationships, but what does happen isn't just dependent on those two people. It's also shaped by the environment, what types of financial services people have access to manage that complicated relationship. So again, I'm focusing more on the environment than the actual individual relationship. My research is really thinking about how we can get the financial services industry to better serve people with mental illness, whether or not they're controlling their own money. And then around the financial literacy issue, this is our most common response in this country to when people are struggling financially. We tend to think that we can solve that problem through putting them through some kind of financial literacy training. Actually, much rigorous research shows that that's very ineffective to put someone through a sort of standardized 8-week class or something like that. So I'm really thinking about what can we do that takes us beyond this standardized financial literacy type of training idea, especially for people with mental illness. What kind of advice and support is helpful? A little bit about the context of my work. So I'm based in the Department of Psychiatry, even though I don't actually have a healthcare background. I work with an organization called the Program for Recovery and Community Health, which has an amazing ability to draw in people like me who aren't traditional healthcare researchers, but nonetheless we research in social determinants of mental health. And one of the key kind of programs within the Program for Recovery and Community Health is Recovering Citizenship, which is a framework of research, but research that's very action-oriented. The idea of the citizenship model is based on this idea of 5 R's. So the argument is that a person's ability to recover and be a full member of their community depends on their strong connection to the 5 R's of rights, responsibilities, roles, resources, and relationships. And all of that needs to be underpinned by a sense of belonging that's validated by fellow community members. So that's the kind of broader framework within which I do my work. In my understanding, having good financial health actually underpins all of the R's, but obviously it's most closely related to resources. But obviously, if people are struggling financially, it makes it harder for them to take responsibility for things. Relationships can get strained. So I think financial health really underlies all of the R's in this framework. I imagine that most of you are familiar with the concept of the social determinants of mental health. So for those that aren't, the idea of the social determinants of mental health, or health generally, is recognizing that most of the factors behind our health and our well-being, our physical health or our mental, are actually determined not by our individual biology or indeed by our access to healthcare resources. Much more of the most of our health is determined by the environment that we live in, the circumstances that we grow up in, whether we're rich or poor, where we live, whether the air is polluted, etc., etc. And race is a huge determinant, particularly in this country. So the social determinants of health is the kind of framework that I work in, as well as recovering citizenship, recognizing that if we want people to be healthy mentally and physically, we need to make sure that everyone is living in a healthy environment. Poverty is a huge component of the social determinants of mental health. Just one moment. So we know from research that people who are poor are more likely to have mental illness and to face more barriers to recovery from that mental illness. So the research that we do focuses on one particular component of poverty, and that's finances and financial services. Our general belief is that while poverty is the bigger problem, people also need access to high-quality, affordable financial services to be able to achieve financial, physical, and mental good health. So just to give you some background on the connection between poverty and mental illness, there is a strong connection. People without a psychiatric disability, approximately 10% of them live in poverty, and this is based on a very, very low poverty level, so people living really in very serious poverty. About 10% of the general population without a psychiatric disability does. People with a psychiatric disability are more than 3 times to live at that level of poverty. And also what's not shown here is that people with a psychiatric disability are not only more likely to be poor, but the depth of the poverty that they experience is deeper than people without a psychiatric disability. Now, there's quite contentious debate around why that connection exists. Essentially, there are 2 sort of ways of thinking about this. The first is social drift. The idea of that is that if you develop a mental illness during your life, because of your reduced capability to work. But basically, the idea is that once you have a mental illness, it will push you into poverty. The other idea is social causation, that actually the experience of living in poverty can make it more likely for somebody to suffer mental illness. In my personal opinion, is that both are true. I think there's plenty of research showing that people who grow up in poverty are more likely to experience some kind of mental health problem. But similarly, once someone has a mental illness, there's many, many barriers to them achieving good financial health. Your ability to generate income and wealth is really limited. There are a number of reasons for this. People with mental health problems are more likely to be employed in low-wage jobs with insecure employment. People who rely on disability benefits, which is not everyone at all, but many do. If they don't have a work history, they may be dependent on Supplemental Security Income, SSI, which provides a monthly income of less than $800 a month, which obviously leaves people living in very severe poverty. For people who do have a work history, they may be eligible for Social Security Disability Income. But even on that income, the average income for a person on SSDI is still less than $1,300 a month. So the type of income that people with psychiatric disabilities are living on are really very, very low, making it very hard to make ends meet. Some people may have that supplemented with food stamps, with subsidized housing, that kind of thing. But really, we're expecting people who are very vulnerable to live on a very small amount of money. So, and as I said, regardless of your opinion about social drift or social causation, I think we can all agree that once somebody has a mental illness, living in poverty is a real barrier to their recovery and their well-being. So now I'm going to talk a little bit about what all this has to do with financial services. Why do we care about financial services? What's it got to do with people with mental illness? Now, I'm not arguing that access to financial services is the most important thing. Honestly, if we could fix the income problem by increasing the minimum wage, increasing job security and benefits, providing higher disability payments, that would be the biggest win. But I do strongly believe that financial services matter, and that when people are poor, they need good financial services even more than people with more money, because the less money you have, obviously, it's more important that you manage it well so that you don't spend more than you have. So what I wanted to do now, and it's obviously I can't see you or see what you're doing, but I'm going to ask you to go through a short exercise, which I hope will help you think about why financial services are important. So, this exercise is, why do financial services matter? And what I'm going to ask you to do is, as I read through this list, please jot down the answer for you personally, and I'll give you my answer as well, just so it's clear what we're trying to do here. So the first question I want you to answer is, how does your money come to you? And by that I mean not who pays you, but how does it actually come into your life? Does somebody hand you an envelope full of cash? Does it fall from the sky? How does the money come from whoever's paying you into your life? So just write that down. And I will say for myself, it comes in direct deposit. Yale University pays me a salary. It appears like magic in my bank account at the beginning of every month. So question 2, where do you keep your money once you have it? So once you've received that money, do you leave it in the same place where it arrived? Do you put it somewhere else? And the answer for me is my bank account. So the money comes direct deposit to my bank account, and that's where it sits until I spend it. Though some of it does automatically get put into a savings account. So actually it comes into my checking, then some goes into savings. Right, question 3, how do you pay those regular, fairly large bills every month? How do you pay your electricity bill? How do you pay your rental or make your mortgage payment? And again, I don't mean with which money or who you're paying or how much it is, but how do you actually transfer the money from you to whoever you're paying? And I will say for me, the answer is, excuse me, I pay my electricity bill, I get an email, and then I click on the link and I pay it online. And my mortgage payment is taken automatically out of my bank account every month. Right, next one. How do you pay for groceries or a cup of coffee? Basically, once you've paid the bills at the beginning of the month, how do you pay for ongoing expenses through the month? Again, how do you actually physically transfer the money from you to whoever it is you're paying? And the answer for me is primarily debit card or credit card, very, very occasionally cash. Next question, what do you do if your car breaks down or if you have to attend a funeral out of state? Basically, if you have an expense that's larger than normal and that is unexpected, how do you manage that financially? Just think about what would happen to you if your car broke down or if the water heater in your home broke. So I'll say, for me personally, if my car broke down or if I had an accident, I would use insurance if I could. Any other kind of expense, I would maybe use money if I have it on my checking account to draw on savings if I had enough. Or if I didn't have enough, I would use my credit card. And then what about those much larger expenses that are expected that you're planning for? So if you want to buy a new car, if you're planning to go on a vacation, which is going to be quite costly, how do you manage that financially? The answer for me is if I wanted to buy a new car or if I want to make a sort of larger than normal payment, if I know it's coming up, I'll try and save in advance. So for example, you may be able to tell from my accent that I'm not American. So I try and travel to the UK every year, which is a costly holiday, a costly vacation. So I have every month a certain amount of money is automatically taken out of my checking account and put into my vacation account. If I wanted to buy a new car, I would maybe try and save for it in advance, or I would maybe get an auto loan. Second to last question, what about those really, really big, hopefully one-off expenses in life, or maybe twice? If you want to buy a home or pay for an education, how do you manage that financially? And I want you to be thinking about what services you're using to enable you to do these things. So my personal buying a house, I was lucky to have family who could help with the down payment, and then I got a mortgage. I also went to a school in a country which didn't charge for education, so I didn't have to take an education loan, but I'm paying for my kids to go to school, to college by having saved up in advance and continuing to save today. And we may have to take loans to top that up. And finally, how are you planning for retirement? So obviously for most of us, there's going to be a time in our lives when we're not earning income. So how are you saving for that time of your life when you won't have an income? And the answer for me is that I have an automatic retirement taken out, and it's through my employer. So the reason I wanted you to answer all these questions is to really think about this pretty broad range of types of financial service that most of us use on a regular basis. These are just some of the services that I think I certainly use, and maybe some of you. Direct deposit to receive money, a checking account to store your money, paying bills online, automatic payments, a checkbook for the type of purchases that people need a check for, a debit card. If you need cash, you can go to the ATM. You may have savings accounts like I do to save for particular purposes. You may have a savings that's just savings for general. You may be saving for things in particular, like through a Christmas club. You may be saving in a college savings account for your kids in a 529. You may have a credit card for when you need to spend more money than you currently have available. You may take loans for much larger purchases, like a car loan or a mortgage. You might have a 401k or something similar for retirement. And you may hopefully also have insurance, so that if you do have a problem with your vehicle or something happens to your home or your health, that you're paying premiums every month so that the lump sum is covered when the need arises. Now, what I want you to think about is what would happen if you didn't have access to those types of services. How would it make a difference in your life? And these are some of the things that people do, and some of the problems that arise when people don't have access to bank accounts or credit cards, or all the things that I certainly think of as normal in my life. So for people who don't have bank accounts, if they receive a check, they have to take it to a check casher to get cashed, which has a fee. They may just have to hold cash, which is obviously risky for multiple reasons to have large amounts of cash on somebody. If they want to pay bills, they may go to a payment agent or pay with a money order, which typically involves a fee. More and more people these days have, if they don't have a bank account, they have what's called a prepaid card or a preloaded debit card. So it functions in many ways like a regular bank account, except it's not a bank account. And one of the downsides of those cards is that they do have quite high fees and fees for multiple types of transactions that people have to make. If you don't have a bank account, obviously you can't get direct deposits, excuse me. And the key issue is that if you don't have a bank account, it's pretty hard to save money. It's hard to find somewhere to safely keep money aside. People who can't have a credit card, if they need to make a purchase or pay for something that's larger than normal and they don't have the funds, they may have to use very costly forms of debt, such as pawn shops, payday lenders, auto title loans, that should say, maybe making a purchase from a rent-a-center, or just taking loans from friends and family. Or, which is very common, if people don't have access to loans to pay for those needs that arise when they don't have enough income, they might just not get what they need. And finally, for people who don't have insurance, obviously if you don't have insurance and your car gets damaged, then you'll either have to use your savings, maybe go into costly debt, or maybe just not have a car anymore, not have a vehicle to get to work, etc. So the cost of not having financial services is pretty high, both in terms of sort of regular fees that people have to pay, the type of debt they might get into, their ability to save and to sort of plan for the future, and overall the kind of amount, the time that people spend managing their finances when they don't have access to a bank account is also pretty significant. So what I'm talking about here is the difference between having a bank account and not having a bank account, or having a credit card and not having a credit card. We're going to do a poll. So I'm not sure how this is going to work. Here we go. So I just want to find out what you guys, first of all, do you have a bank account? So if you can just click yes or no to that question. Do you have a bank account, or yes or no? And then the second question is, do you know or can you estimate what percentage of all people in the US do not have a bank account? And then the third one is, what percentage of people in the US with disabilities, and that's all types of disabilities, do not have a bank account? I'll give you a few minutes to answer the questions. One or two more moments. Okay, so it looks like so far everyone who's responded does have a bank account. As far as the numbers of people in the US who don't have a bank account, the most common answer is 25%. And then what percentage of people in the US with disabilities don't have a bank account? Again, it looks like the most common answer you think is 25%. Nobody's saying that they don't have a bank account. So according to this, you're all fully banked. Right, next question. Have you ever taken a pawn shop, payday loan, refund anticipation loan, that's in front a loan you can take in advance of getting your tax refund, or an auto title loan, which is when you can use, basically the lender gets access to your car title so that if you don't repay the loan, they can take your car. And then the last question is, what do you think, how much more likely are people with disabilities to use those types of loans compared to people without disabilities? I'll give you a couple more moments to answer. Okay, so a number of you have taken those types of loans, and you generally think that people with disabilities are going to be about 3 times as likely to use those types of loan products. Right, let's go and see the answers. So obviously there's no right or wrong answer to having a bank account. You all overestimated the number of people in the US who don't have a bank account. It's actually only around 7 to 8%. But people with disabilities in the US don't have a bank, about twice as many, more than twice as many people in the US don't have a bank account if they have a disability. The types of products that I mentioned, pawn shops, payday loans, refund anticipation loans, or auto title loans. The reason I mentioned those isn't that there's anything wrong with them per se, but they tend to be more costly than using a credit card, for example. And they're also easier to take if you have damaged credit, so they're more accessible to people who don't have a credit card. And then finally, people with disabilities are in fact twice as likely, not 3 times as likely to use those products. So I'm just going to show you, I'm going to talk about some of the data that we have that talks about access of people with disabilities to financial services. But before I do that, do we have any questions? Does anyone have any comments or questions you want to ask? Okay, if you do think of something, just put it in as we go along. Okay. So I think it's important, just before we sort of get into the detail about people with disabilities or mental health problems, that access to financial services is absolutely not just a mental health issue. It's not, this issue of the financial health work that I do is not just a special thing just for people with mental illness. Everyone needs to manage their money well. We all need to avoid spending more than our income. We all need to be able to plan ahead for expected and unexpected expenses. We all need to be able to save and to borrow in a way that we can afford. And having good access to financial services is absolutely crucial to allow us to do the above. But so the issue for people with mental illness in particular, there's 2 real reasons why I think the research that I'm doing around people with mental illness is important. The first is that people with disabilities are more likely to be poor, and people who are poor are less likely to have access to good financial services. People who are poor and have a disability are even less likely to have access to financial services. And I think this is particularly important because obviously, as I said earlier, the less money you have, the more important it is to be able to manage that money effectively. And we currently have a situation where the people who have less money are having to pay more for financial services and don't have access to the really high quality financial services that could enable them to make the very best use of the frankly too little money that they have. And another reason why it matters for people with mental illness in particular is because people with mental illness may have particular challenges related to their illnesses. Now, I tend not to bucket people with mental illness in a kind of separate category of the special type of problems that they have when it comes to finances. But the fact of the matter is that some people do have particular problems managing their money, and currently the financial services environment does not help people with those challenges. It really doesn't meet their particular needs. So these are the 2 related reasons why I think we really need to care about this issue. So just a bit of data about disability and access to financial services. I should say that this, we don't have good data, unfortunately, about people with psychiatric disabilities specifically. This excellent report that I'm going to present some findings from is based on a national survey, and it was done by the National Disability Institute to understand how people with disabilities access financial services, but it's not separated by type of disability in most cases. So I think just keep in mind that it's likely that people with psychiatric disabilities are likely to be in a worse situation than people with disabilities generally. So again, the first, I've already mentioned this fact that people with disabilities are about more than twice as likely as those without a disability to be unbanked. And to be clear, unbanked means not having a bank account at all. The underbanked data, which is the next one, The underbanked means you have a bank account, but you regularly use non-bank financial services in addition to your bank account, such as a prepaid card, money orders, pawn shops, whatever it might be. There's many, many people in the country who have a bank account, but also that bank account isn't essentially meeting all of their financial service needs. They're having to get it from somewhere else. So this is just clearly shows that people with disabilities are much more likely than others to be unbanked or underbanked. Note that there's also very, very strong correlations between income and race and being unbanked and underbanked. So I think the reasons for people with low income being unbanked are fairly clear, that banks don't think they can make a profit from them. There's a long history of racial discrimination in financial services in this country, going back to the redlining in the 30s and 40s, where people of colour were denied access to loans to buy houses. So we have a strong legacy in this country of excluding people of colour from good financial services. The next piece of data talks about how people with, so this is one of the areas that they break it out a little in type of disability. So I don't know if cognitive disability overlaps exactly with psychiatric disability. I suspect it doesn't. But this does make the point that people with cognitive disabilities are more likely than anyone to not have a bank account, and I suspect it's similar for people with psychiatric disabilities. So this is interesting. People with disabilities rely much more than others on in-person services when it comes to their use of financial services. So the dark line is people with disabilities. They're more likely to go to a bank teller in person. They're much less likely to access online services. And I think this is significant because of the fairly rapid shifts these days that banks are moving away from providing, in-person services in branches, and they're really encouraging customers to use online services. So I think that raises a red flag for access for people with psychiatric disabilities in particular. People with disabilities are less likely to have savings accounts. If you can see here, 41% of people with disabilities have a checking account only, compared to 19% of people without a disability. That's particularly concerning because we all know that saving is so important to be able to manage the kind of fluctuations of life. It's probably partly to do with the fact that people with disabilities are more likely to be poor, but I think may also be associated with the fact that disability benefits are associated with asset limits. So I certainly know anecdotally that many of the people I work with who are living on disability income are reluctant to have a savings account for fear they may trigger asset limits and lose their benefits. SSI in particular, SSDI is not such an issue. Or Medicaid. Medicaid, it also, assets also affect Medicaid eligibility. People with disabilities also are more likely to feel that banks are not interested in serving them. This data just shows that people with disabilities think that banks are not interested or not very interested, and I think this speaks to the kind of level of mistrust that exists generally between low-income people and banks, but obviously specifically people with disabilities. And finally, people with disabilities are more likely to use those non-bank alternative financial services that I mentioned, and this includes what we call transaction AFS, so money orders to pay bills, check cashing to cash checks, remittances. Actually, people with disabilities are not more likely to use them, but they are more likely to use money orders and check cashers, which obviously you have to pay for. And people with disabilities are also more likely to use those non-bank loan products that we talked about, including pawn shops, rent-to-own stores, payday loans, refund anticipation loans, and auto title loans. Again, those loans meet a need, but they do tend to be more costly than the kind of loans you can get through having a bank account and a credit card. So in sum, I think this really important analysis by the National Disability Institute tells us that people with disabilities generally are less likely to are less able to access quality, trusted, comprehensive financial services. And I think people with psychiatric disabilities are probably going to be worse off even the general group. Now, I'll stop a moment if anyone has any questions at this point. anything at all, any points of clarification, any disagreements, just feel free to raise anything. All right, I'll move on then. So the possibility then is that if I'd made the point that not having access to a bank account is bad, why don't we just make everyone open a bank account? And this actually has been the response of government, of local government over the past 20, 30 years, recognizing that there's a strong connection between being unbanked, not having a bank account, and struggling with finances. We've had kind of a movement to get everyone connected with a bank account, I think based on the assumption, the incorrect assumption that the reason people don't have bank accounts is because they just don't really know how to bank, and so if we get them connected with a bank, everything will be fine. Wouldn't that just solve the problem? And despite all those best efforts, there's a persistent number of people who don't have bank accounts. And I think it's really important to understand that although these non-bank services are very costly, for people who are poor, actually bank services don't really work very well. And in my field, a lot of people mention the numbers of people who are banked or unbanked, unbanked or underbanked. We all kind of know those numbers, but the number that we don't mention very much and we don't talk about is the fact that most people who don't have a bank account now have had one in the past. So it's not as if they don't know about banks. They've had a bank account and for whatever reason it didn't work out and they no longer have one. And I'm just going to go through some of the reasons why the bank accounts aren't right for everybody. People who are poor, who have low incomes, often end up paying very high fees. Maybe some of us have personal experience with this. I know at times in my life I've been stuck in this problem. Many bank accounts require a minimum balance and there's a fee if you go below it. Overdraft fees are extremely punishing for people. It's very easy to go overdrawn if you don't have a financial cushion. If a check goes through later than you thought, multiple ways that people can go overdrawn without meaning to. And I don't think I need to tell anyone here that an overdraft fee is on average about $35 a pop. And people can easily spiral into hundreds of dollars of overdraft fees in a matter of days. When it comes to having a credit card, if you're low income and it's hard to pay off that bill, then you might get fees if you pay late. People who are poor and actually people with disabilities tend to have lower credit scores. Now, I'm lucky enough that if I do go overdrawn on my bank account temporarily, there's a fairly low cost overdraft facility I have, so it doesn't cost very much. If you don't have good credit, you don't get that. People may, if you have lower credit scores, you're going to pay higher interest rate on a credit card if you can get it. You're going to be paying higher rates on your car loan. And then obviously people who have bad credit are paying much more for everything. It's harder to get housing, employment, insurance, etc. But then going back to why it might not make sense for people to have a bank account, low-income people are more likely to have unpaid debt. And if you have a bank account, it can be easier for your money to be garnished and attached so that you're involuntarily repaying that debt. So these are just some of the reasons why for some people it doesn't actually make sense to have a bank account. And those non-bank financial services actually sometimes work better for a lot of people. So this is just saying maybe those check cashers, pawn shops, and loan stores, payday lenders aren't so bad after all. And actually I would argue very strongly that for people who regularly go overdrawn as a way of kind of making sure that they're paying their bills, actually a pawn shop and a payday lender could be much more cost effective. Overdraft fees are a huge problem. So I'm going to talk a little bit now about the research that I've done with individuals with serious mental illness. This was the NIMH funded research. We worked very closely with a group of 31 people with serious mental illness on their financial issues. We were offering one-on-one counselling with the primary intervention, meeting people where and when and how they wanted to talk about their finances and get help with whatever problem they considered was a priority. It was a very low-income group. Most were earning less than $11,000 a year. Most were not working, though a few were. Just over half had a bank account, but crucially, of the 15 or so who didn't have a bank account, all of them except one had a bank account in the past. Most weren't able to save money, and usually when we ask people, are you able to save money, they were typically thinking, do I have money left over at the end of the month? And most didn't. So just an example of one person who had an account. She didn't have one in the past, but she had one now, and she was in recovery, doing really well, had a great job, working as a peer support worker. She was glad she had a bank account, but was struggling with the fees. So she said, they're ridiculous. It doesn't help to have an account the way they take money from you. It's okay to have fees, but these are just too high. Marlene also struggled with the fact that having a bank account for her kind of made it even harder to control her spending. She said when she used to mostly operate with cash, it was kind of easier for her because she would leave the money at home or just take $10. She could kind of control her spending. She said now she had a debit card, she would just swipe it without even thinking how much she was spending, and she was really struggling with that. Also, because she had a bank account, she had the possibility of having a checkbook. And as a former substance user, she was very afraid of having access to a checkbook, because she could take advantage of if she was struggling. She said, I saw what happened with my father. My brother's on drugs. I prefer not to have a checkbook in the house at all. So I think that just speaks to some of the limitations of what bank accounts offer to someone with needs like Marlene. Another client that we worked with, a participant in the study. So this was a gentleman who was still currently really struggling with very active mental illness and drug abuse. He had bank accounts in the past, but we were working with him to try and have a bank account. But he was in something called the check systems, and I don't know if you know what that is, but just in brief, it's kind of like credit report for banking. So if you've had a bank account in the past, gone overdrawn, never been able to repay it, that's recorded in this database, and if you try and open a bank account in the future, they'll see if you're in that system, and if you are, they'll probably deny you the bank account. So Warren wasn't able to have a bank account, and instead he was using a prepaid card. One of the struggles that he had, he couldn't, it was this balance between whether to save on ATM fees, because the card he had, like most cards, had pretty high ATM fee for every time he made a withdrawal. Either to save money on ATM fees and just draw the cash out all at once and then risk just spending it immediately, which is what he would do, or to withdraw the money bit by bit, as he said, after I pay my rent. He would try and do that to help him manage his own spending impulses, but then he'd lose $50 a month on ATM fees, and he was only getting $800 a month. So he really struggled in deciding how best to sort of control his own impulses. And just talking about his impulses, I mean, actually what he describes here I don't think is particularly related to mental illness. He just said, I've got nowhere to sit down and feel comfortable, no girlfriend to keep me occupied, I just go out and buy things. I like spending money, not crazily, but I like spending it. I don't know why I'm like that. I feel so happy when I get money. I walk into the store and feel like I just have to buy something even if I don't really need it. I mean, I feel like that sometimes too. But for Warren, having access either on his card or in cash to money kind of whenever he wanted it, he really struggled with doing what he wanted to do, which is plan ahead and spread his money out through the month. And the services that he had access to really didn't give him any kind of option to do that. And finally, one of the things we found depressingly is that people with mental illness are really overwhelmed by debt. And by debt, we don't just mean credit card debt or medical debt, but though those were a problem. I mean, all types of debt and arrears, ranging from personal loans to loan sharks to being behind on bills and rent. A couple of examples. So Veronica is an SSDI recipient and occasionally works. She had to pay a light bill that she couldn't pay, plus her son was, she had to pay bail for her son. She borrowed from a payday lender online. So payday loans are illegal in Connecticut, but you can get them online. And it was a $500 loan. And when I met her, she was still repaying it. She'd taken it some months before. She ended up paying a total of $1,545 and still hadn't paid off the loan. Then I worked with a gentleman called Simon who had, he was working, he was on SSDI, he was doing awesome compared to struggles he'd had in the past. And he couldn't understand why it was so hard for him to make ends meet because he was earning more than he'd earned for a while. And we went carefully over the months, tracking his expenses, seeing where he was spending his money, and essentially he was overwhelmed by debt. He was paying on a student loan. He had rent to products from rent-to-own stores. He paid a lot on this car payment, plus he owed child support. And what ultimately happened to Simon was that in order to make ends meet, he ended up after work doing what he called ghetto Ubering, which was just driving friends and associates around through the night in his car to make money. Ended up falling asleep at work repeatedly until eventually he lost his job. That sent him into a spiral of drug use and symptoms, and he ended up actually in prison. So what have we done in our project to try and address some of these problems that we found? One of the things, and as I mentioned in the NIMH-funded study, we spent a lot of time providing one-on-one counselling to people with a serious mental illness in the study. We learned an enormous amount about their problems, but we were also able, as we learned about the problems, to gather the information that we could to help where we could. And I think it was quite successful doing this very flexible one-on-one support. We also had the option of a peer support group. We've also endeavoured, as I said, we're really thinking systemically and environmentally, to work on changing at the mental health care system. So we've provided training to mental health care providers so that they have a greater understanding of not just the types of difficulties their clients face, because I think they know that, but what kind of resources and knowledge they can bring to a conversation to help somebody. And then we've also been working to try and change the financial services system. So we've been working with banks and credit unions locally, and then we've made a couple of national presentations trying to get the financial service industry to understand the particular needs of people with mental illness. Locally, we got a local bank to offer what's called a passbook savings account. Simply, a passbook savings account is different from another savings account in that you can only withdraw the money in person at the branch, so it's harder to spend impulsively. We've been advocating for municipal level financial counselling, recognising that not everybody needs specialised mental health financial counselling. If there was free financial counselling available in the community, that would be very helpful for some people with mental illness. And we've been collaborating with partners on grants to try and do more research in this area. And identifying kind of broader policy reform needs that at the state level and at the federal level that would help people attain financial health more easily. And we've had some successes, I would say, at the, I don't know why that's not there. Okay, so at the individual level, through individual counselling, we were able to find that people, one of the most helpful things was encouraging people and working with them to track their spending over time, so they could really kind of visualize how they were spending their money and decide if they wanted to do it differently. We checked people's credit reports to make sure that they understood whether or if they had debt, and in a couple of cases, people who thought they had debt didn't. Quite a few people who didn't think they had debt did. Sometimes that was incorrect, so we could actually just repair it fairly simply. We helped people develop a savings habit and build up small emergency funds. A key issue, according to our participant feedback, was accountability. So even if they weren't really doing things very different, knowing that we would be checking in with them regularly to see how things were going sort of made them really think about their financial behaviour. People became more confident regarding managing their finances. There was less shame associated with it because it's a huge sort of messing up financially is very stigmatized. We gave people solid advice about, if you have this kind of bank account, perhaps you could change to a different kind of bank account, helping people think about where they could borrow more cheaply rather than going to a very costly source. And we were regularly giving advice about the rules of the benefit system, as I'm sure you're not surprised to hear. And just a couple of quotes from the clients. Someone said the most helpful thing has been writing down what I spend. I used to just swipe my card, but now I never go shopping without making a list. I'm looking at ways to reduce my expenses that I wouldn't have considered before, cancelling her TV, meeting with you, talking about my needs has put my focus on thinking how I want to save. And then at the systems level, which frankly I'm most excited about because I think that's where we can really make big change. I mentioned the passbook accounts, that was just with one individual bank. but I don't know if you guys have heard of bank-on accounts. So bank-on accounts is a national movement to get banks and credit unions to offer accounts that cannot go overdrawn and therefore don't have overdraft fees associated with them. So that's we've worked to bring funding to our city to have a bank-on fellow who's out there talking to the banks, talking in the community, making sure that everyone knows that these accounts are available. We've managed over the past 4 years to get funding to set up a financial empowerment center in the city, and now that we actually just got the funding last week, and then moving on, our part will be to make sure that that financial empowerment center is fully inclusive of people with mental health problems. And then we've also been advocating for change through other types of research. We very recently published a report together with the Yale Law School, making recommendations for what we think banks, the types of products that banks could offer to be more accommodating of people with mental illness. And I'll respond to that question that's come up in a minute. And one of the things that it's related, one of the things that we, the lawyers who worked with me on the supported banking report, they hint in that report that potentially banks have to offer products that accommodate the particular needs of mental illness under the Americans with Disabilities Act. So there's kind of a gentle hint there to banks that they need to think about doing this not simply to be, good sort of corporate citizens, but it could be that one day someone will bring a case that actually to comply with the Americans with Disabilities Act, you have to offer accounts that meet people's needs. So I suspect that's a long way off, but it's a possibility. So work has happened, progress has been made, but I think a lot more needs to be done at the systems level to meet the particular needs of people with mental illness. The list of things I have here are the types of difficulties that people with mental illness often have when it comes to finances, memory and communication challenges, impulse control at certain times, trouble with planning and decision making, being vulnerable to scams. Some people may need supported decision making. That could include having someone else control their money completely, but I think we also need options where, sort of graded options where the owner of funds retains control, but there's some level of supervision. I just want to make the point here that I think these types of difficulties that we list here, people with mental illness may be more likely to have them, but many, many people have these problems when it comes to finances. There are some promising developments out there. That these are things that already exist and that you can take advantage of and make use of with yourself or your clients. So these bank-on accounts that I mentioned, everyone should find out about them. If anyone has ever had an overdraft fee in their life or works with someone who struggles with overdraft fees, find out about bank-on. It's pretty incredible. There's various sort of fintech or financial technology apps that can be useful. There's Dave, which helps people avoid overdraft fees, Even, which helps save small amounts of money. Fresh EBT helps people manage their food stamps more effectively. There's more and more of these financial empowerment centres, such as the one we're having in New Haven, popping up around the country, so you can get free one-on-one financial counselling, which we know is more effective than group-based financial literacy training. It's possible to find non-profit debt counselling. There's one called Money Management International. There's plenty of debt counsellors out there. Many of them are for-profit. It's very important to find a non-profit one. They may still demand a fee if someone enters a debt management plan, but it's going to be much lower than with the for-profit providers. In the area of shared decision making, there's some really exciting advances. There's a couple of companies offering for a monthly fee customizable cards. They're targeting either children of older adults who are struggling, and also for parents of teenage children, the TrueLink card and the Green Line card. These are cards that you can put money on and then customize how the money is spent. You can customize where the money can be spent, how much can be spent, at what time it can be spent. So I think there's huge potential there for people that I work with. The EverSafe app is a kind of tool you can sign up for. It enables you to monitor another person's bank account without actually touching their money. So you can sign up for customized alerts. So for example, if I'm worried about my brother's spending behavior, I can sign up for EverSafe. EverSafe will monitor his account with his permission, And I can set it so that, you know, if he spends more than $300 at a particular time, at one time, or if he, you know, spends more than a certain amount of money in a week, or whatever it might be, you can customize it so you get alerts based on certain types of spending behavior. With our work with the law school, we're also advocating that banks should be offering this as a matter of course to customers through providing a view-only option, which is I could give another person permission to have a separate login and password such that they could view my transactions but couldn't touch my money. And I think that that option could be helpful not only for people who don't want their money controlled by someone else, but who nonetheless are happy to have some level of monitoring. But also, based on our research with people who have payees, it's clear that there's a lot of mistrust can arise because you're never sure if the payee is spending your money, is using your money, or sorry, is misusing your money. So I imagine there's potential that the person who doesn't have control over the money could have view-only access to at least keep an eye on what's happening and therefore, you know, feel more relaxed about it. I hope people heard about the ABLE account, which is an account that enables people who have disabilities to save up to a large amount of money, up to $100,000, without affecting their Medicaid access or disability benefits. So that's a pretty huge transformation that we've had in the last 3 years. One of the problems with ABLE accounts is that they have small monthly fees, which for people who have plenty of money are sort of inconsequential, but for the people that I work with who are trying to save, you know, $10 or $20 here and there, to be saving that money in an account that is charging a monthly fee is very problematic. So I think the ABLE account, as good as it is, does need some tweaks, but it's really, really incredibly helpful for some people. And finally, this is just what I think that the future could look like. This is sort of my dream. So this is what I see as the current sort of spectrum of needs of people with mental illness. On the one end, we have people who absolutely need somebody else controlling their money. They are really not capable of managing their finances. At the other extreme, we have people who don't need any help at all. They're just fine. But in between, there are many, many different situations that people are in. They may want somebody to control some aspects of their finances, but not all. They may just want advice from time to time. People's needs aren't static. They fluctuate back and forth. So somebody may need somebody to control their money this month, but not next month. At the moment, we do not meet this range of needs. We meet the needs of people who don't need any help, because we don't need any help, and we meet the needs of people who do need someone else to control their money through the representative pay or the consultative mechanism. We do not meet the needs of the many, many people who are moving back and forth across this spectrum. So but I think there's potential, there's possibilities that are already out there, and there's new developments taking place which I think offer a lot. So at the end of the spectrum of people needing control, those customizable cards could be super helpful via the account. Respecting people enough to give them advice and training with the idea that they might not always need someone controlling their funds. Somewhere in the middle, these view-only accounts and never safe are super helpful. Many people I've spoken to say that they would really love to have a real joint account, which is an account where they can only withdraw money with the other person's signature. Banks typically don't do that other than for corporate accounts. There's the power of attorney facility, which is a sort of legal mechanism. We're not exploiting it as much as we could for this population. And there's some other mechanisms there that I think we could be using more. And then at the other end of the spectrum, making use of all those apps and that financial technology out there that may be targeting millennials, but is actually super useful for all of us. Making sure that people have access to one-on-one counselling when they can get it. Providing specialised mental health financial counselling if that seems to be necessary. Connecting people with bank-on accounts, which are already out there all over the country and anyone can open them. And then this is actually a bank in the UK that's coming to the US soon called Monzo, which actually does enable you to set limits on your own spending behaviour, you know, so that you can't just use your debit card, you can't just swipe sort of without controls. You can set controls for yourself that are quite difficult to what's the word, circumvent, so it just controls impulse spending to some extent. And then I think it's important to remember there's kind of bigger picture issues out there. The ABLE accounts are key. We have very problematic regulations of the debt industry in some states, so it's really important that we're thinking about how reforms to the debt industry are important for all vulnerable populations, well, anyone who's borrowing money, but particularly for people with mental health problems who may, as somebody was asking in the question box, be particularly vulnerable to payday loan services and the like. And then I just want to finish by making this point about what I call the curb cut effect, and it's not my term, other people have used it. Even though I've been talking here about services that I think are good for people with mental illness, they're also just simply good financial services. There's almost nothing that we might provide to people with mental illness that wouldn't be good for many, many people. And I know Monzo, this bank in the UK, is really thinking about that. When they develop products and services, they're thinking about people with mental health problems, partly because they want to serve that population, but frankly, mostly because they recognize that if you can give a great service to someone who has a mental health problem, that's going to be a service that everyone else really, really appreciates. So that's the end of my presentation. There's a couple of questions there already that I'll address, but please, if you have any additional questions or if any other people have questions, type them in the box and I will get to them. So Jay had asked, for those who have a diagnosed ID, meaning mental illness, could exploitation be argued with payday loan services and the like? I think what you're getting at here is what I was, again, what I mentioned that the law school had worked on with me, this idea, hinting at the idea that if you're going to be abiding by the Americans with Disabilities Act, which is a requirement for any kind of business, that actually you need to be taking into account the particular situations of the customers you're serving, including people with mental illness. Now, I personally think that the kind of exploitative services that we see, not just from payday lenders, but also, frankly, from banks through overdraft fees and other kinds of fees like that, I consider them exploitative. The issue is when does exploitation cross the line into illegality? And right now, it's very easy for those kinds of products to take advantage of people and not be considered illegal. I think there's legislation that's been done in some states, and that's certainly possible, to protect people who are vulnerable and are taking advantage of those products, to at least protect people after the fact and remove the sort of negative impact on their credit report or whatever it might be. But we're really a long way from protecting people in the way that I think we need to be protected. They need to be protected. Frank had asked, are there any efforts to advocate for increases in disability payments to a level that could more realistically meet an individual's base expenses? I think there has been legislation proposed, but this all has to happen at the federal level, and things move very slowly, especially when they're asking for additional money for marginalized populations. So I don't see any hope, frankly, in the near future for people to be having the kind of money that they need to survive. At the state level, changes can be made, and it's always easier to enact change at the state level. So some states have state supplements to add to the amount that individuals receive. Obviously, making it easier to get food stamps, to get subsidized housing. There are ways that you can make financial life easier for people without necessarily just increasing disability payments. And I would really like to see municipalities and states taking action to make sure that people with disabilities have those additional subsidies to make life easier for them. Does anyone else have any questions? I'll just give you a couple of minutes. So if there's any, if no one has any more questions, we can wrap up. But I'll be sharing my email in a moment, and if anyone has any questions they want to ask me individually, please feel free. I have, I can give more concrete advice around what's possible in terms of connecting people with services and products that are already out there, the type of what advice and counselling can look like and can be successful for people with mental health problems. What are good ways to develop partnerships with financial institutions? We have some experience here in New Haven, so I'd love to share. Also, and I think one of the big successes we've had is working with the municipality to create a more supportive financial services environment for everyone. And our job has been to speak about, marginalized people in general and the fact that people need services across the board, but then kind of making sure that people with psychiatric disabilities and mental health problems are part of the conversation. Rather than just saying, we're here working for people with mental health problems, you tend to be kind of like pushed to the side. But if you start the conversation as, we're here to make sure that everyone who needs it has access to affordable financial services that work for them, then that gets people interested, and then you can just make sure that included in that bigger population of people whose needs aren't being met, you're just making sure that people with mental health problems are included there. We found that to be most effective. So this is some information. My email is annie.harper@yale.edu. Please feel free to contact me, and thank you for your interest.